Hey guys, Steve here from theturtlefollower.com with your strategy session for Thursday, October 23rd. So we talked yesterday about a potential reversal off the backside of this trend line that we have in place, the uptrend line that was in place pretty much for most of the rally. That was broken, obviously, in the last 2 weeks, and we've rallied right back up to that area where we've broken. So now that we've kind of seen if we're going to go ahead and break down from here or move higher. So with today's action, we actually moved higher for a little bit and hit the backside of the 50-day moving average. All right, so now we're back to the 50-day moving average, and we kind of sold off a little bit in the afternoon. You could see here on the tick chart, it was pretty much sideways most of the day, and then really the last few hours it started to get a little bit more volatile. You could see here we had a negative tick of negative 1347, another one of negative 1261, another one of negative 1000, and then 1192, and we also had one of positive 1138, it looks like. So the afternoon definitely got a little more volatile. I don't know if that was people looking to take profits off before earnings came out or what, but we gave a little bit back in the afternoon. But nonetheless, the fact that we actually broke through yesterday's high and didn't continue downward, I think, is a good sign. And now we're basically at the 50-day moving average, which proved to be some resistance back here in the beginning of October when we were consolidating right around this 50-day moving average. So for right now, I would say bias is sideways to up. I would rather see us consolidate here, but looking at the last few pullbacks, you could see V-shaped reversal, V-shaped reversal, V-shaped reversal. So we're kind of, as much as I didn't think it was going to happen, we are kind of experiencing that V-shaped reversal. The difference here is we finally made a lower low on the S, or at least on the futures here, the S&P too. But where we hadn't done that in the past. So this V-shaped reversal could potentially put in a lower high, and we could reverse from here from this 50-day moving average. So the next few days, few weeks are critical here. We need to see at least some kind of sustainability right in this area. We wouldn't want to see a quick reversal. Doesn't look like that's going to necessarily happen, but you could see we are pushing into some resistance areas. So we need to just be aware of that. For the NQs, similar situation. They're actually down after hours because of Amazon missing earnings. But again, we tried to push above the 50-day moving average, failed. But again, moving above yesterday's high is a good sign. So yesterday may have been a little pause. Today, we kind of resumed our trend higher. But you could see here, that downtrend line has been broken now. All right, it's pretty definitive that that's been broken, and right now the 50-day moving average is really the only resistance left until we hit this 4,090 level, which could potentially happen and move to new highs. So how ironic would it be if we kind of broke down to new lows and then it was bought up so quickly that we moved to new highs? I don't think I've ever seen that kind of pattern before, but we still were diligent. We took some of our profits off. We cut some losses early, and we've been buying some stock back with the cash that we've raised, and we're going to be doing that again tonight. So, again, having a process, having a plan is essential to surviving in this kind of environment. But again, the Dow is probably one of the weaker ones. You could see it didn't even come close to the 50-day moving average today. So on a relative basis, I would say the Dow is the weakest of the three. But again, downtrend line probably still intact on the Dow if you really drew it to the highs. Okay, so downtrend line still intact. So we just got to make sure that from here that we can just move sideways, buy ourselves some time, and then break out higher. Like I said, we wouldn't want to see a reversal lower because then that means this trend line is now controlling. And the fact is, we would basically be saying that this is a lower high and a lower low, so trend would be reversing. But if you look here on the linear regression channel of all three of these, there's the Dow, the NASDAQ is right off that bottom line, and and the S&P as well. So it was definitely in some oversold conditions. Now, let's see if this linear regression channel holds true. If we regress back to the middle of the range, which would be right here, over 2,000 into new highs. So interesting to take a look at that. All right, so we are going to be adding 2 new positions to the portfolio. We're going to get to those after we look at our positions. So you're going to have to stick around to the end of the video for those 2. But for right now, let's take a look at our 6 positions. Again, mostly consumer discretionary and consumer staples. Okay. So the first one, Costco, another move higher today. We had this reversal signal yesterday. Today it tried to push higher, ultimately ended up closing a little bit lower than the open and pretty much unchanged, up 5 cents. So it's definitely hitting some resistance around this 130, 150 level. And now it's a big decision. I still think this comes back and tests at least 127.52. That's just my opinion. I think it needs some kind of rest, and maybe it would be nice to be able to put in a higher low from this level. But for right now, we're still good. We're gonna still be using, for right now, this 120 level is still going to be our support and our stop level. The next level that I would like to drag it to would be right around here. Let's say 122. All right, so we'll put another line here. That would be my next trailing stop level, 122. We use the highs from this little consolidation and the low from the pullback. But for right now, 120 is the stop. Home Depot yesterday hit some resistance. Today, sure enough, was able to push higher, but again, with the selling pressure at the end of the day, still ended up closing lower. We are going to be using, and still using, 86.50 as our current stop. All right, so there's really no other spot that we could use. Eventually, we may be able to use this 88.70 area, which would be the low from right here at the beginning of September. But for right now, I think 86.58 is a good spot. You could see the trend line, the 50-day moving average, consolidation. They're all in play still. So for all we know, this may come back, put in a higher low, and move higher. For right now, though, you could see on the linear regression channel, we are pushing into this overbought condition. So it's very rare that it pushes outside of that. So maybe some consolidation is in order, or a little bit of a pullback. Kroger, again, another topping tail today. We had one yesterday. Again, another one today. Closed up 20 cents, 0.37%. But we are using $50 as our stop. And again, next level that I would like to see on a little bit more of a breakout, or maybe a potential higher low and then a breakout. Next level I think we're using would probably be somewhere around 51. All right, 51 being the lows from this 3-day pullback, and also coincides with the highs from back here in the middle of July. So I think that would be a good level to drag to, or to trail stops to. But for right now, $50 is sufficient. L Brands, I think it's Limited Brands, not sure, but symbol LB. Right now, you can see we broke out. We had a little bit of a pullback yesterday. Looked like to be a potential bearish engulfing pattern, but that didn't play out because we actually moved higher today. So for right now, we are still using 63.36 as our stop. But eventually, I think we can move to 65.29. All right. Next one, Pepsi was our only stock that was down today. And you can see it's definitely having some trouble around this 95 level. Again, we had tried to move higher, ended up closing lower, engulfing the entire bar from yesterday. But after a move like this, I think that's kind of to be expected. Swing traders are taking it for a quick trade. Buying it at 90, letting it go at 95, where it's seen some resistance before. So for right now, it's a matter of, do we consolidate a little longer in this box? Do we consolidate above resistance and then break out? For right now, we're still using $90 as our stop. All right, and there is no new area that we would be able to even trail to. A lot has to happen before we would trail stops in Pepsi. But for right now, risk is managed by position size, and we'll just let it play out. Last one is Ross Stores, ROST. Okay, we're using the 7220 area as our potential stop. That is the area from the top of the gap on earnings. Okay, gap being the area here where there is no price action. Okay, so basically it closed at 69 and reopened again at 7220. So that's the low, and that's the stop we're using. So you can see it consolidated, broke out. Again, yesterday had a slight pullback. Today it was up much more. I was up to almost 81 or over 81. But the fact is, just really putting in some sideways action. And for right now, 72.20 is our stop. Next level I would be looking at to trail stops to would be 74.10. All right, that would be the bottom of this consolidation. But I think I just want to let this one play out a little bit, and then let this area set up a little bit more. But you could see that would be a nice area to trail to, being the highs from back here in the middle of March, and again the lows from here on the 23rd of September. So that's our positions. We are going to be entering 2 positions this evening, or I should say tomorrow morning, 2 triggered this evening. The first one, an oldie but goodie, Apple. All right, we were stopped out of Apple last week on a breakdown, and sure enough, we ended up getting stopped out pretty much at the bottom. But we said that if it turned around and set up again and broke out over 103, that would be our entry to get in. And sure enough, that's exactly what it's done. You could see here, if you're using it on a rectangular consolidation, okay, it was consolidating between 103 and 98. We had the slight breakdown. We ended up stopping out on was this the 16th, day before earning, a day or two before earnings, and we ended up selling on the 17th, right at the open, at 97.20. But right now, 104.83. So the fact is, stock set up. There's no reason not to get back into it. Earnings have passed, so everything is in the clear here. Uptrend still intact. We had a slight little blip on the radar there, but uptrend still intact. So we're now at new highs, all-time highs on Apple, and blue sky territory ahead. So for right now, I think it's a good-looking setup. Unfortunately, I wish we didn't actually get stopped out here. Maybe, maybe we were a little aggressive in that. Maybe we should have had our stop down here at 94. But the fact is, it is what it is. We stopped out. I think the area that we stopped out in was sufficient. We were trying to limit risk at the time. Don't forget, the market was still trending lower at that point. But since then, we've rallied and have now put in a new high. So what we're going to do with Apple is we're going to take the trade at the open tomorrow, and we're actually going to use $95 as our stop. All right, $95 will give us a stop all the way down below those lows that stopped us out. And at the end of the day, we gave up about $4 in or $5 in profit. So you never like to give up profit, but it limited risk at the time, so I'm perfectly fine with it. Again, entering tomorrow at the open, stop $95. The other one that we're going to be entering is Travelers, TRV. Okay, Travelers had earnings passed same day as Apple, and we had a small consolidation in place, and we were really waiting for a breakout over 95.91. That's why we didn't take it yesterday, because we were actually waiting for it to break out over these highs altogether. So we're going to go ahead and actually be buying Travelers at the open tomorrow. You can see I have my order set already. And we're going to be using $91 as our stop level. All right, so if we get a reversal and a breakdown, we'll be getting out of Travelers, but you could see uptrend if you want to draw it between these lows here. Okay, there's the uptrend line. We had a slight, again, similar to Apple, a slight move below the trend line. and now it's rallied higher. So entering Travelers at the open, stop is 91. Other stocks that had nice moves today, Lockheed Martin, that one's close to setting up. If you took it on a break over 176.60, you're a little bit more aggressive than I, but not a bad play. You could see it was consolidating right here around that 50-day moving average and around the trend line. Okay, so if you took that breakout today, or if you want to take that breakout tomorrow, because this is the trigger bar technically, you're more than welcome to do so. We are waiting for a break over 181, and then that one's going to be a little bit tough, but I think we're going to probably have our stop down here at, say, 170. 170 would be the highs from this area in the end of July, and you could see that we closed above that level both times on the last pullback. So that's it for our stocks. I'm trying to just remember if there's any other ones. This one would have been a nice setup. C.H. Robinson Worldwide, but earnings are actually coming up next week, so that's why we passed on that one. Waste Management, another nice setup. Okay, breakout, you can use 45.62 as your stop, but again, earnings are on the 29th, so a pass on that one as well. DVA, we talked about this one, and we've added this one as a potential in the weekend update. We also noted that this one does not have any earnings, so if you're not into that, definitely pass on this one. But again, would have been a nice setup, but earnings are less than 2 weeks away, so passing on that one as well. All right, so as far as positions go, I think we're good. We're going to be adding Apple and Travelers, so let's add those now so I don't forget to cover them tomorrow night. All right, so there's our new positions. That'll bring us to 8 positions, and don't forget we're using a 0.5% allocation going forward. I think that may give us the opportunity to not use margin and keep our positions small enough where we're not really out of the woods yet. We're not at the point where we know we're blue sky territories, that the market's not going to reverse on us. So I want to stay away from margin, and I also want to keep our positions small to accommodate some broader diversity that we would have normally gotten with the margin. So for right now, I think that leaves us with 8 positions, leaves us with about $30,000 in cash, about 30%. Plenty of cash on the sidelines to keep taking some good setups as they come. So we're not looking to rush into this, more trying to be a little methodical, make sure we have good diversification, and can get some good positions in there for hopefully a run higher and a run back to profitability. So that's it for tonight, guys. Thanks for watching. Please, if you haven't done so already, please follow me, StockTwits, Twitter, Google+. Subscribe to the YouTube channel, and subscribe to the nightly recap on the website. We'll see you tomorrow, and then Saturday. Actually, we won't see you tomorrow because tomorrow's Friday. We'll see you on Saturday for the weekend update. Have a great rest of the week, guys. Take care.